What's up, guys? Welcome to the weekly review for the week of March 16 to 20. This week had a clear story, a choppy start, strong bearish follow through, and two tradable setups. Let me walk you through how the week played out, the key trades, and what I'll be watching going into next week. So, this is the 4-hour chart showing the full week. You can see the green dotted line marking the start of the week. Monday and Tuesday, the market pushed higher. It was choppy and not a clean environment. I took a setup on Monday, which initially went in my favor. Price moved about halfway to my target, but then reversed and took my stop loss. Tuesday, a setup did form, but I made the decision to skip it. With both FOMC and PPI scheduled for Wednesday, I didn't want to carry any risk into that uncertainty. And looking back, that was the right call, as that setup also would have been a stop loss. Then from Wednesday onward, the market completely flipped and started pushing lower aggressively. Wednesday, it was moving toward the weekly gap zone, and Thursday on the London session, it actually reached the weekly gap. And by Friday, it had broken well below it and continued all the way toward 23,960. This is exactly the kind of week where patience early pays off later. The setups only came once the direction was clear. The best trade of the week came on Wednesday. The market had just had the PPI released in the morning and was pushing lower toward the weekly gap. I spotted a short setup on the 1 minute time frame using the 8:30 a.m. 15-minute fair value gap. I entered around 24,960 with a 30-point stop and a 96-point target. The trade hit the target for 3.2 hour. This was the cleanest setup of the week. The bias was clear, the structure was right, and the execution was clean. This is a perfect example of what happens when you wait for the right structure before pulling the trigger. So here's the week at a glance. Monday stop loss, Tuesday skip due to FOMC and PPI, Wednesday 3.2 hour winner, Thursday stop loss, Friday 2.5 hour winner. 2 wins, 2 losses, and 1 skip, and a net positive week, thanks to the R multiples on the winning trades. The key lesson from this week is patience always pays. Setting out on Monday and Tuesday's poor conditions and waiting for Wednesday's clean setup made all the difference. Now, looking at next week, this is the 4-hour continuous NQ chart, and the picture is pretty clear. The market has been in a downtrend since mid-February, and this week's price action also confirmed that bearish momentum is still very much intact. The key level I'll be watching is the 23,731 low marked in the chart. That's a significant liquidity draw. Old lows sitting below current price that the market tends to gravitate toward. My bias going into next week is bearish. I'll be looking for short setups on any pullback into fair value gaps above, targeting the 23,731 area. And as always, I'll be posting daily reviews every day, so make sure you're subscribed to follow along. And I'll see you guys on Monday.